Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Tuesday, June the 9th, the year's 2020. Let's talk trading. Live by the tick, die by the tick. I know some of you out there, that's the way you trade. And you're really stressing yourself. Now I just want you all to understand that these videos are for educational purposes only, and your results may differ from mine. Trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional. And when you're trading, just remember to always have your stop loss in place so you never lose more than you're willing to lose on any one particular trade. Now, what we're talking about, living by the tick and dying by the tick, comes into some of the brain management. And I've got Walmall on the line. Tell them about living by the tick and dying by the tick.
Well, the thing I was thinking about is we had another trader on the line today, and had gotten into a trade, and the first one, of course, it went against me, and I took a loss, took another trade, and that one went in my direction, took a third trade, and then it went against me, but in the long run, I was able to pull that out and actually get a win from that. And in fact, that other trader wasn't on the line anymore when I actually wound up getting a win on that. But the thing is, if you're living by the tick, you're going to go and freak out, and you're going to get out when you shouldn't get out. You're going to go and get in because, hey, it's moving. I got to get all those ticks. I got to get all those pips. I got to get everything that's there. Or the other thing is like, it's going against me. It's going against me. And you're not following your trading plan. You're not following your rules. No, you live by your trading plan. You don't live by the tick. Now, of course, the ticks better be a part of your trading plan, but it's most important to go and be living by the trading plan.
That's that sums it up really well, because it really does sum it up, because when we look at the charts here, I guess I can put it on this chart here on the price action chart. I suggested to traders that when you're starting out, use the 1 hour chart, because it's really hard to mess up when you do that. What I mean by that is when you see it's red and it hits the line, you go short. You see it's green when it hits the line, you go long. As Dragon would say, if you mess that up, then you're an idiot. I'm gonna blame Dragon for that one because it's so funny. But if you shift down to M1, you can see there's a lot more going on where it doesn't look as nice and neat as a H1 chart, because some people like to say, oh, anything below H1 is noise, but that's a bunch of garbage that I've debunked in videos before, so I don't need to explain it ad nauseum. But the fact of the matter is, if you have your trading plan, and your trading plan says go long at the line, and you do, and even if you see price wiggling around the line, then it's like, well, am I doing something wrong? Or here, in this case, it would probably be telling you to go short at the line, and if you went short here, then it came here, and then it reversed on you for a few. If this movement right here is causing you stress, you're just killing yourself. Because if you go short here, chances are your stop should be up here. So anything that happens in here is part of your plan. You get stopped out, that's part of your plan. And down here is your profit. And then if you come down here and you take some profit, then it goes there and you're all happy. Then you see this, and then you're all mad. And then you see this, and then you see this, then you see this. You're just doing that emotional roller coaster.
Yeah, and I think that's a very, very important point that you're bringing up there, because that's exactly what it turns into, is an emotional roller coaster. We need to be very, very objective. And I know as humans that's tough and that's hard, but we have to be able to do that. And, and you got to start asking the question, if it's going against you, Okay, yeah, nobody wants it to go against you, but at the same time, if it's affecting you tremendously, why? You have to answer that question. Why is it affecting you so much? Is it because you're over leveraged? Is it because you really don't have a trading plan in effect, and so you're not prepared for it? It's sort of like, when I took that loss earlier when that other trader was on the line, I think I took a loss of like 6 pips. The reason why I took a loss of 6 pips on that was because what happened was it went positive in my direction by 2 or 3 pips. I thought it was going to go and continue. It didn't. It reversed on me. And my rule is that if I'm positive by 2 or 3 pips on the reversal, I do not wait for it to go and hit my stop loss. My rule and my trading plan says get out at -3. Well, guess what? It moved faster than I could get out. And because it moved faster than I could get out, I took a stop. I took a loss of 6. Am I upset about it? Sure, I'm upset about it. But at the same time, it's not going to paralyze me because that was part of the trading plan. And we have to have that plan. And I know I sound like a broken record sometimes because I keep on saying the same things all the time. Have a plan and then, trade the plan.
Yeah, but the thing about the broken record is that's what trading is. It's I was joking with Walmall earlier today before making this video. I said, I'm just repeating myself in these videos, because there's how many different ways can I tell somebody that if the H1 candle color is green at the line to go long?
Right. And that's what trading is. It's rinse, wash, repeat. That's what it has to be. And sometimes, it doesn't come out in a wash very nice. And that's just what trading is. But if you've got a trading plan and you're managing your risk properly, in the long run, statistically, we know you will do fine. But you need to go and have a trading plan that you're able to control and trade. Because, one of the things that I've learned with trading with TRO a little bit is that his idea of trading and his risk management is different than mine. There's nothing wrong with his trading plan. He makes money. There's nothing wrong with my trading plan. I make money. But the difference is I can't trade his trading plan. I've got to trade mine so I'm comfortable and I'm able to go and make it work. And then you don't wind up going and doing what we sometimes do, which is living by the tick. Because then it's sort of like, oh boy, I'm up 3 points. Let me get out because I'm positive. I finally got a trade that's positive. It's 3 points. Well, who makes money on 3 points unless you really heavy, unless you gone in really heavy on it? No, you can't be living on that. You got to be going and living on. My trading plan says, for instance, for me, it's 10-5-1. I got to be living on that 10-5-1 idea. I want to get to 10, but if I can't get to 10, I'll get to 5, and if I can't get to 5, I'm going to get to 1. And I have to live on that, and that's what I live and die on. I live on 10-5-1.
Yeah, but full disclosure, both of us, we yell at the screen sometimes, or we beg. It's like, come on.
Oh, absolutely. Absolutely. You got to root. It's sort of like because you're rooting for the price to go in your direction. But I said this last week in a video, I think. There is nothing I can do to change what direction the market is going in. I can't make it go faster. I can't make it go slower. I can't make it change direction. All I can do is root, and that's all I can do. It's sort of like, you watch a ball game, and it's sort of like, sitting in the stands, there is absolutely nothing I can do other than yell. I can't go and affect the play on the field. Well, I can't affect what happens on my chart. All I can do is read what's on the chart, and based on what I'm seeing on the chart, trade it.
That's really it in a nutshell there, traders. Because I'm still getting people wanting me to mentor them. In fact, I spoke with another trader earlier today. It was funny. I woke up about 3 a.m. my time, and I replied to an email, and then he replied back, and he had his phone number. And so I called him and, kind of shocked him. He didn't expect a call from me at like 3 something in the morning, but I figured he was awake, so it was okay to call. But, there's just so many different methods, and you have to find it. And the one thing I told him, and I'll just repeat it here, is you have to focus. You decide what you want to trade. Is it futures? Is it Forex? And the reason I said futures, that's what my friend Airball's trading, and he sent me a screenshot, and it didn't look like my indicators were working right. So I had to download the futures from his broker, so I was getting the exact same feed. And I guess maybe he didn't have the latest version of the indicator, because I said, here, try this code again. And so it worked fine for him. But, you pick that one instrument, and then you decide, well, out of that market, you pick one instrument. Do you want to trade, a Forex future, a pound future, a euro future? Do you want to trade, a gold future? You pick one thing. You cut down all the variables. And so you have nothing but constants. And then you can learn how to trade, because you're not flipping. You can get a feel for your system, a feel for the instrument, how it moves. And it's funny because Walmall downloaded the futures, because I was saying, hey, you check this out, because we were looking at the British pound futures. But it kind of confused him, because he's like, there's no data on the chart. It looks like...
and the reason why is because I've never traded that market before. So I did not know what to be looking for, didn't understand it, and I was a fish out of water.
Yeah,
and
I wasn't really teasing him too hard, but it's like, well, Walter, because he said he didn't get it, and I said, well, you see, when we look at these Forex charts, this is a synthetic market. It's built. It's not the real market. But because these candles are bid candles. See, this is the bid price. But when he saw the candles and the futures, those were like the real tick. I call them tick candles, because it was using the last price. And so if no ticks come through, there's no movement on the candle. As opposed to here, the bid and the ask keeps changing, and that's what you see here. That's when you see the candles, moving. So it's a different candle. That's a real candle. This is synthetic. But, that's the thing. You have to pick the instrument. You have to learn your platform, learn what you're trading, and just stick to it over and over and over again. And don't change anything until you learn it, because these methods work, but you have to work them.
Exactly, and that's the whole thing. It's sort of like, I think we talked about this last week. Or actually you talked about it yesterday. The whole idea of of earning your stripes, or going and doing martial arts and earning your different belts as you go up. Well, that's what you got to do. It's sort of like, I know, TR, you've been trading since the 70s. I haven't been trading. I've only trained for about 5 years or so. But the reality is, I actually a little bit more. 2009 is when I first started trading. But you start looking at it. When I look at where I was, 10, 11 years ago, it's sort of like some of the things I've gone back and looked at. And said, what were you thinking, you foolish man? And because you're just blindly trusting things and whatever. And the reality is, when you sit in front of the chart for all those years, you can see things. And it's sort of like, we were even talking about it, today, where it's like, I think I called out to you. I said, where price is going? It's going to 1.2740. And I said, and I didn't know when it was going to hit it. Okay, but I knew it was going to get there eventually today. There was no reason why I should ever get to that level, other than the fact of what I could see on the chart. Well, guess what? Last hour, it went to 1.2740. And that's just the reality of time in the ditches. You got to spend time in the ditches, digging and learning and just scrapping through it. And part of that, the concept of this video, living and dying by the tick. Well, that's part of it. Living and dying by the tick. As you go through it and you're living and dying by those ticks, you start to understand the organism of what this market is. And so because you understand what it is, you're able to live it and breathe it and smell it and understand it. And it just becomes second nature to you.
Yeah.
I'll give you a baseball analogy real quick. And that is that, when you play baseball,
you got 20 seconds.
All right, I'll make it quick. In middle school, what they do is they tell you to sleep with your baseball gloves. Well, guess what? You need to go and sleep with your charts.
Yeah, and remember, fellow traders, it's not what you trade, it's how you trade it. So go out there and drain the banks. And if you're new here, click subscribe, click the like, click the bell, and make sure you share this video all over.